Hello and welcome everyone to the 18th ATC Tape Reading Podcast. My name is David Torres and I've been a longtime student with ATC. A couple announcements before we get started is we have our free version of the chat room that you can currently click and get free channels. And one of those channels is the night reviews, which are Monday through Thursday, 8 p.m. And what those are is really just a time where some of the best traders come in and review the tape and the trades from the day and the lessons that we can proceed with the following day. Definitely take advantage of that right now because there's going to be some changes in the near future where that's more exclusive. And also all new chat room members that currently enroll with us will get our 1 through 4 free course, and that is currently going to be a limited time deal as well. Things are going to be subject to change in the near future, so definitely take advantage of that while you can. With that being said, it's my pleasure to introduce Rich Lepis, CEO, founder, and head instructor. Rich, how are we doing today?
What's going on, Dave?
Nothing,
Happy to be
another.
here as always.
Absolutely. It's been a great week for content, especially, Traders Exchange, the way that we've been approaching that, where it's kind of the live mic. That's definitely, I've seen the profound impact on students in the past couple of weeks. Being able to ask your question live and use live examples from the days, it's really revolution, like just changing the way Traders Exchange is in the minds of our students. And kind of just jumping off on that from last week's or this week's question was more about following multiple market makers. And I kind of want to stay on the topic of that, multiple market makers and the market maker tactics. So recently, yesterday, we had XOM trade that really highlighted orders. So I noted that there's three possibilities that market makers have. They can fully execute the order they show in the matrix. They can pull the order from the matrix and not execute it, or they can partially hit the order. If I'm missing one, please correct me, but those are the three that.
That's pretty much the scales that it's going to be set on.
Yeah, so what's the psychology of each and how do we implement those within our trading? Obviously, there's going to be other variables around that, such as if they built beforehand, if they didn't. It's not going to be black and white, just those things alone, but those are a variable that will indicate, certain direction or that the market maker is taking, right? Or tactic that they're taking.
Yeah, so the interesting part about that is that the other variables don't really matter in comparison to what they do. Because this is basically a show of hand. And we'll go over those three examples. So yesterday we're talking about 91 in XOM. Okay, so there was a 2 million share order sitting there at 91. Okay, anybody that wanted to be able to, to build or execute or just take a whole large amount of shares all at once had the actual ability to do it because the order was there. Okay, so we'll start with yesterday's example. What happened is they only printed about 800, 900,000 shares of that 2 million share order. So when I was explaining the stock to everybody yesterday, it literally told us exactly, they showed their hand. They told us exactly what their tell is going to be. And the reason behind it was because you got to think about it. If I'm going to build huge, let's say I want to build a 10 million share position or 15 million share, something that's really big. Why wouldn't I execute the entire order that was sitting there at 91, the entire 2 million shares? So what happens is because 800,000 shares got hit on the ask side of things, immediately where does your mind go? What number trade?
And number one trade, given the size relative to everything else, you think, okay, this is going to pull back and it's going to pull back at least a dollar. Yeah.
Way above print personality. I mean,
Right.
just could be that simple. But there was another interesting part about the way that they executed. So they only took out about 900,000 shares, but they actually, most of the order was pulled. Okay, and then we saw it leak over into the 9103, the 9104. So that execution alone told us short term. And it also told us that somebody didn't want to buy all 2 million shares there. So if someone was really looking to build, because again, when we see those prints, and this is why, why understanding how that matrix works or how the order book works, whatever platform that you're on, it told us everything about what they were looking to do. They weren't looking to bring it back to build a huge amount, even though that's what the prints technically showed on paper.
Right.
Because if I just showed you those prints, right now, you'd be like, damn, this is going to have a large pullback coming into it. But even though it looked longer term, it was actually short term because they they only needed a certain amount in order for the stock to be able to go. So of course, you're still going to get a little pullback coming from there. But as I explained yesterday, the price target is going to be if we're going to take that number one trade, my time frame and my price target is going to be so much smaller because I know that's not what they're really looking to do at that point. They're looking to just finish up what they need in order for the stock to start running. And that's what we ended up seeing, exactly what happened.
Mm-hmm.
Now, let's say the chart would have looked completely different. Let's say they hit that whole 2 million share order that's sitting there at that 91. Now we know they're looking to build. There's nothing short term about that. If you're going to cut out, and take out a 2 million share order, well, that's the tip of the iceberg. So now at this point, we know that number one trade is going to have a lot more room to the downside, and the duration of time before it comes back up above 91 is going to be a lot longer. And then we have the same situation where let's say that 2 million shares sitting there and it just doesn't get to 2 million. Now, as the psychology behind it is they're just using that order there to hold the stock down. People see 2 million shares, so what are they doing there? Now I have to look to the substance. So the other two things actually give me a trade alone and tell me what the game plan is. But when they don't actually hit the order and they're using it to hold it down, now I have to go right to my substance. What's happening when they're holding it down? Are we seeing a ton of buying? Are we seeing a bunch of selling? What's the substance that's happening underneath that point? So the funny part is there's 2 out of those 3 give you specific trades and exactly what to expect to a very high probability. And then that one trade really tells you have to pay attention because now we know someone's there. So if we see 2 million share order, it's very rare that you're ever going to see somebody hold it down underneath but not execute. Why would you even do that? There's no point behind it.
Right.
So it really comes down, but those are really in a nutshell. I mean, of course, there's other variables that we could bring into this, as you said earlier, but those 3 things, it tells us exactly what the stock is going to, 2 of them tells us exactly what the stock's going to do for our trade at that moment. And the other one tells us we need to look for substance and actually find some type of controlling prints or some other part of the story to be able to think about even looking for a trade at that point.
Yeah. So the thought process of using that order to hold it under so it doesn't break above. But what if they end up pulling that order there and not executing one bit of it? In that case, the psychology behind that is the market maker didn't want that to execute that order because they didn't want it at a higher price. So the relative time frame of it being above that level is going to be a lot less. That's kind of the thought process I have. Is that along the lines of correct? Or
that's completely true, but you also have to think about what you just said. There's no prints. They're not buying. They're not selling under, but holding it underneath. Right. So if they're pushing it up, what are they actually doing? They're creating interest.
Right.
So that fits right into the fact of the variables that we're looking for to see what they're actually going to do. Because if the move up was actually going to happen, they have to build underneath. There's no other reason to hold the stock down.
Yeah, no, that makes complete sense.
Going up, you don't hold it down unless you're building or you're going to buy shares of it. That's the only reason to keep it at a lower price. So if you don't see that and the stock comes up, well, now that's like you just said, that gives us an entire new view into what's going to happen. That move up has no substance behind it. It doesn't match what they're doing. So they're just creating interest above that 91, getting retail in. You could expect it to almost drop immediately back down, for them to either build or sell, and then we go from there with those prints.
And that level itself would technically be weaker because there's no prints at it, right? So the ability to break back under is going to be very easy. So that creates good variables for that short side of the trade. And
it's a hollow level at that point.
Yeah. And in terms of that's another great topic as well, is this relative strength of levels that I don't think really many people have talked about. And it's I don't know how to formulate that question necessarily, but is how do we view strength of levels? Because there's going to be levels where you're going to have a ton of ask prints at each level, and there's just the market maker interest there is really high at each level. And then there's going to be trades where the foundation is lacking, and there's going to be lack of prints at any of those levels. No, I noticed that the levels with lack of market makers are easier to break than ones with a ton of market makers.
It's easy. So I always try to use very simple analogies. So if there's nothing at a level, that level doesn't mean anything, because what makes a level strong is market makers have game plans there. Okay, so if a market maker has a game plan at a level, we have to be under the assumption it's strong because we know they're there. Yeah. So they can take any amount of money that they want and they can add into it to hold it. They could let it break first and then bring it back up. There's a million things that they could do. That's where we see games coming in.
Right.
But when we get to a level and there's absolutely nothing there, it's It's almost like if you were to, lay out concrete but you made it a centimeter thick. It's, instead of 3 inches, like it's not really concrete at that point. So it almost breaks down to another point now is that what's happening around that level, a really strong level. Let's say a stock's going up. Let's use 91. Okay,
Yeah.
91 got hit in XOM and it got hit really strong. That's a strong level within itself, which means if it goes under, it's going to have a hard time staying under because it wants to go back to where it originally formulated. Okay, in this case, ass prints. That means it's strong from coming down towards it.
Mhm.
Okay, and then it's also going to be strong coming back above. A resistance becomes a support after it breaks a resistance, same type of deal. So now we have to go straight to the prints themselves and see if it's not a strong level, we don't need much of anything.
Mhm.
Okay, overall game plan is just going to go through that level. Statistically speaking, of course, there's going to be exceptions to every rule.
Right.
Okay, but overall, if that's a strong level, in order to break it, we need to, and I always use the term jackhammer prints. We need to see prints that are breaking down because that concrete on a market maker level is so much stronger. So we have to see the prints. If we're expecting it to break under 91, we have to see the selling to start coming in. Because the same thing we were talking about before, if we don't see that selling and it breaks underneath, that level is so strong, we're coming right back up above it.
Yep.
The only way we're actually going to continue is to break it down. And the reason, the term jackhammer prints is because it's literally think of those prints being a jackhammer. And the more prints that come up, the more that we're putting, the more dents we're putting into that concrete, the easier it's actually going to be able to break it.
Yeah, no, that's a great way to perceive that. And I think that really fits well into, so kind of actually transitioning from that, how do we assign percentage to that? I think that was maybe a traders exchange question and wasn't maybe formulated in the best manner. Is how can we assign percentage to the strengths of level, or is that not even something to assign percentage to, more of something to?
See, that it's not a variable within your trades because it's something that needs to happen. You know what I'm saying? In order for us, when we add percentages to a trade, now we can add percentage on management, which is a different story, but a percentage on the trade itself can't be assigned to that because even if we know a level is really strong, let's say 91, we know 90 is really strong, but I take a short down to 90, I know as it's coming to 90, that's got to be my price target because that's strong. Now my price target can change. But the reason we have a price target before we even get into a trade is because that's exactly what tells us how much we're able to lose on that trade. You can't have a stop loss if you don't have a price target. If the stock's going to move $5, your stop loss can't be 5 cents. It's not going to happen.
Right.
If your price target's 5 cents away, you're not going to be expecting the stock to drop 40 cents on you. It comes down to that risk or the versus reward area. But when you really break it down, so those strong levels become our price targets. That's how we kind of figure out our trade. And when we start to see it coming to it, that's when we really start to pay attention. Because now with the management, now it's not about a percentage added to the trade. It's more about percentage of the chance of my trade continuing. It's a completely different mindset because I know I'm perfectly happy. I got into that trade knowing that it had $1 to the downside. I'm willing to lose 25 cents on it. Very simple calculations, no thinking involved, no emotion, no nothing. That's exactly what it's going to be. But just because I have a price target of 90 doesn't mean a print can't come in to show me that now it's got the ability to go down to 89.
Right.
So what's happening is when I start to see those jackhammer prints, it's not a percent again on the trade, it's now a percent on the continuation, and it's going to affect how I manage my trade. I think a lot of us, we see these things happening out there and we immediately want to think, how do I add a percentage to this?
Right.
But you can't add a percentage of something that's going to happen later when making a game plan for a trade.
Right. You're already in it now. It's the management percentage time kind of frame
So
of.
that coming in, that doesn't change the percentage of my entry.
Right.
Because it came in afterwards, that's just it changes the percentage of my expectations. So my expectation of it breaking 90, the percentage is now going higher. And depending on how many prints, I mean, we could spend all day here talking about how, and in each different situation, which, we do in classes as we're seeing it happening live. But like to generally say that, I don't know.
Yeah.
It's going to depend specifically on that stock, the market maker I'm following, how strong is their game plan, so on and so forth.
And staying on that topic of percentage, how would we identify the hitting the order, pulling the order, and not executing it all? How do we identify percentage with that? Or is that another case scenario where it's not necessarily percentage?
I mean, when you have a 2 million share order, it's real easy to say the percentage is 90.
Yeah,
It's
yeah.
damn, 2 million shares. I mean, that's why I kept saying yesterday how it was such a perfect call out, because there was only one thing that could happen.
Hmm.
So instead of looking for that number one, if you took that number one and had about 50 cents to go, but you have to know it's going to be real short term. The second it gets there, you're going to be looking for that trigger back up. You're better off almost waiting for that
Yeah,
number four
exactly.
trade to happen, because of the fact that the range just wasn't huge at the moment. It just didn't have enough room to go. You got to be really quick, but you're not going to miss the overall trade for the number four to try to catch, a quick 20, 30 cents out of a number one trade.
Yeah, more or less, if you were to take that number one, if you're a student, odds are you think that's coming at least $1, and then you probably would have been shaken. But
So now we got to go, it comes back to being relative. If we're really going to break down a percentage of those three different scenarios, essentially you have no percentage if it's just using an order to hold it down. We need
right,
to, the only way we see the show of hand from it is them doing something afterwards. But with the other two, whether they execute the entire thing or they only execute part of that, now we know they just showed us. It's like them, playing poker with them and they turn the cards over. We know exactly what they're doing now. And so both of those, if it's a 50,000 share order, my percentage isn't going to be 90. If it's a 100,000 share order, my percentage isn't going to be 90. I'm going to be somewhere in the lower 80s.
mm,
Okay, but when you start getting high, anything basically 500,000 or over, now we're in the 90s at this and the trade itself. The only reason I'm putting a lower percentage to it is because it's less shares. The more shares someone uses, the more confident they are.
right.
So I mean, that's just in the simplest form of things, and the way to explain it is the more shares, the higher it's going to be. But you're still damn, even if it's 100,000 shares, you're still 80, 81, 82, 83. You're still up there. And then
Right.
when you add any type of variables into it, now on top of that, which obviously XOM had a million of them yesterday.
Yep.
Now it's like, I can't call something 140% trade, but now we're in the 99s.
Yeah. Very, very high. So kind of staying on that topic is, okay, that order there at 91, how do we recognize whether it's hit by one person or multiple people?
So that's interesting, because technically there's two different types of people that could be doing it. So it's hard to say, because we're going to be basing it off bursts. So let's say there's a 200 million share order. We're going to see in a burst of a certain amount, a burst of a certain amount, a burst of a certain amount. Okay, that's telling us that it's one trader that's not out there. Well, we have to assume it's one trader because we don't really know. It
Right.
could be three traders hitting at a different point, but with that amount, it doesn't affect what our expectations are going to be by that much. So it's not even enough to almost care about.
Hmm.
But when you see it, you'll know the difference when all of a sudden Tom and Sales comes to an order and it just goes like that. It's one all of a, there's just pages that happen instantly. There's a difference. So we're still going to take it as one person, but there's one person that's executing it in smaller amounts. Okay, so it's almost a way of hiding. Now they're obviously not hiding because everyone's watching or anyone that knows about an order book is watching with that 2 million shares. So the person that's executing it in let's say 25,000 share bursts or 50,000 share bursts, 2 million is probably going to be 50,000 somewhere to 100 somewhere in that area. That's someone that's trading more like me, where I'm not the one that's controlling everything. I'm following. I'm
Right.
following someone else. So I'm slowly executing, but I'm still getting a large amount of shares coming into it. The big difference is when all those pages just pop up instantly. Think about who that is behind that screen.
Right. It's like a boom. It's just all
That's
at
the
once. Yeah.
that's the person that owns that controls this stock. So the results are very similar, but now you know who you're really following.
Hmm. And on the other hand, the order was there and it comes up, hits a little bit, comes back, hits a little bit more, comes back and hits, takes some time, come back and hit again.
So So that's also another big, variable that comes into it. Like I don't want the stock can't come and hit the level. There's 2 million shares there. Come hit the level. Let's say show 100,000, then come back 10 cents, then come back up. That doesn't mean anything to me. That's
Right.
just someone executing at a level. There's not really much that's going to go into that. I want to see somebody that's taking these shares.
Adamant about it, right?
Because there's no reason if there's 2 million shares there, if you want 2 million shares all at once and you're that, I'm not really sure how to even say it, but like you're that the Don, like you're that big of a trader that you could just execute that. It tells me a lot about you. If you're the type of trader that's executing 50,000, clicking the button over and over again, that tells me a little bit about you. Now, if there's 2 million shares there, but it kind of I guess pussyfoots would be like, the best term that I can use, but comes up and it taps it, but then the stock comes down, then comes up and it executes a little bit more. Now, though, when that's happening, even though there's a 2 million share order there, I'm taking it just based off print personality. So, if there's 10 prints that come into it, I'm going to treat it just like a regular stock with 10 prints at the S based off its print personality.
Right.
We want to see this happening, and like even the person with 50,000, they're just constantly clicking the button, but they're making it look like different executions. And you also notice, this is something a lot of traders do, and not like huge market makers, but like really good retail traders. They'll change their exchange as they're doing it.
Oh.
So it actually looks different in the eyes of someone else because you'd think like, okay, I'm just on the NASDAQ. I'm on the NASDAQ. What they'll do is that, they'll NASDAQ, then ARCA, then Edge, and they'll keep changing their exchanges to make it look like there's just separate people that are executing at that point. And they won't use I say 50,000 shares just to, put a number out there, but they'll use like 46,000 and then 34, then 63. They're not going to execute all at once because otherwise, that's completely useless doing that because if they just keep seeing it change exchanges, but it's 50,000 shares each time, they know who it is. They know exactly what they're doing. So you'll see it kind of vary like that.
Yeah, the person that comes in all at once is adamant, doesn't care who sees them.
That's the thing. Imagine being in the market and just not caring because that's how confident and you're the one that's doing it. Whatever that stock does, it's because of you. And that's the person that I personally love to follow.
Oh yeah. Yep. That's all we do, right? Is follow that person.
We're not going to see 2 million share orders every day.
That doesn't happen too often.
But when it does happen, you throw the kitchen sink at it.
Yeah, high percentage variable there.
Mm-hmm.
Well, sweet, Rich. I think that wraps us up for today. Really great topics and lessons. Always appreciate the insight that you provide.
That's my pleasure. I love doing it.
Thanks, Rich. Appreciate it.